Tesla's shares dropped by as much as 10% to $858.83 on the morning of January 24th, bringing down the stocks of most electric vehicle manufacturers in their wake. Rivian Automotive plummeted to a 52-week low of less than $60 a share, while Nikola Corporation fell 10% from its January 21 closing price to $6.70 before recovering. All around the board, electric vehicle company shares are seeing a downfall. This is giving investors quite a scare. Should we be concerned about a Tesla stock crash? Would Elon Musk be able to ride out this wave? Let's find out everything in today's video. While other EV manufacturers are not profitable and are still finding their way into the market, Tesla is a seasoned veteran. Its stock price soared during the epidemic as a result of record deliveries and the Biden administration's determination to prioritize electric vehicles as part of its climate change strategy. Investors anxious to join in on the EV action poured money into Tesla stock, propelling the company above the $1 trillion mark. However, the stock's direction has shifted in 2022. Tesla's stock price has fallen by almost 24% since the beginning of the year, despite the fact that the company recorded record deliveries and analysts issued gushing letters of recommendation. However, the automaker must still deal with the looming threat of a market sell-off in technology. The NASDAQ has entered a correction territory and is in the midst of a record sell-off. Two investors are deleveraging their portfolios and reducing their exposure to speculative investments. This includes stocks whose earnings are projected in the future. Tesla's one such example. While the EV industry has recently garnered governmental support, it has yet to gain traction to compete on an equal footing with gasoline vehicles. During the first half of 2021, for example, electric vehicles accounted for only 7% of the worldwide automobile market. A Fed rate hike may have frightened investors away from Tesla even more because it lowers the value of future earnings that are discounted back to the present in model valuations. According to Wedbush securities analyst Dan Ives, a lack of profitability, chip supply difficulties, and a slew of production issues have thrown a heavy shadow over the electric vehicle market. In this current risk-off market, electric vehicle companies find themselves on the wrong side of this market storm. Now, execution is critical to rebuilding credibility on the street one brick at a time, the analyst continued. As of this video, Tesla is trading at about $888.40, down 6% from the opening price, while Nikola and Rivian are 7.6% and 4.6% lower, respectively. Is it time for Tesla investors to panic? The current price crash on Tesla stock may be a familiar storyline for long-term investors. The stock of the electric car maker has always been a risky investment, and the current price drop, while severe, was not entirely unexpected. Analysts predict that the automaker will dominate the future electric vehicle market. For example, Morgan Stanley, a longtime Tesla bull, recently released a note claiming that Tesla has no serious competitors. The firm stated, "As we continue to see Tesla's model rollout unfold, we believe car companies and investors may need to rethink their electric vehicle strategies in terms of volume per stock keeping unit." Only 11 of the 41 analysts who cover the company rate the stock as sell. The company's fundamentals are at the heart of its bullish thesis. Even as other car companies struggled to cope with the pandemic's problems, Tesla opened factories, devised workarounds for the chip shortage that afflicted the industry, and reported record deliveries. Analysts are predicting a strong performance for Tesla when it reports its earnings later in the year. If Tesla's going to perform badly, then all the other electric vehicle manufacturers will suffer as a result. For example, Lucid is currently going through a tough time at the market. Lucid Group's stock is plummeting. According to the data from S&P Global Market Intelligence, the electric vehicle stock was down 15.5% as of early March. Lucid shares have now lost 41.5% this year as of this video, thanks to the drop in the stock price. The loss this week can be attributed to Lucid's bleak outlook. The fourth quarter earnings report from Lucid was one of the most anticipated in the electric vehicle industry. The startup that made Tesla sit up and take notice when it beat the EV leader's range rating was about to report its first EV sales revenue since going public in mid-2021. Investors were also eager to learn how many cars Lucid had delivered since it began deliveries in October of last year, as well as how quickly the company was ramping up production. Lucid delivered a snoozer of a report on the evening of February 28th, and its stock plummeted by double digits the next morning, contrary to expectations. Lucid had fallen short in a few crucial areas. They made $26.4 million in revenue in the fourth quarter, but it fell far short of Wall Street expectations. Only 125 units of Lucid's debut sedan, the Air Dream Edition, were delivered in 2021. In the fourth quarter, the net loss more than tripled and surpassed $1 billion. Lucid also lowered its 2022 production forecast to a range of 12,000 to 14,000 units, down from a previous estimate of 20,000 units. On the positive side, as of February 28th, Lucid has secured over 25,000 reservations across all 4 models, which could result in sales of more than $2.4 billion if all reservations are converted into confirmed orders. Expansion at Lucid's only factory in Arizona is also on track, and the electric vehicle manufacturer has announced plans to build a factory in Saudi Arabia this year. This is a significant development because it reassures Saudi Arabia's electric vehicle manufacturing partners. The Public Investment Fund, the sovereign wealth fund of that country, is a major shareholder in Lucid. Today's automotive market appears to be suffering as a result of Russia's attack on Ukraine. Both Ford Motor and General Motors stock prices are down sharply. They're down 6.9% and 5% respectively. Tesla, a competitor in the electric vehicle market, is also falling. Tesla stock, which gained more than 2% points earlier in the day, has lost all of its gains and is now down 0.8%. So what exactly is going on here? According to Reuters, General Motors is the first in a long line of companies to cut ties with Russia in response to the country's attack on Ukraine, or in response to Western sanctions imposed in response to the attack, or both. At this time, our thoughts are with the people of Ukraine, GM added in a statement, saying that the loss of life is a tragedy, before suspending car and truck shipments to Russia until further notice. Shipments to Russia have also been halted by Volvo, Daimler, Mercedes-Benz, and Harley-Davidson. In the case of GM, for example, Reuters notes that the company only ships about 3,000 cars to Russia each year. Ford, with its larger manufacturing presence in the country, is more vulnerable, which could explain both its stock price decline and its reluctance to publicly denounce or cut ties with Russia. During this conflict, Tesla, on the other hand, might actually gain some goodwill. While shipments of Tesla's ultra-luxury Model Y and Model X electric sedans and SUVs to Russian oligarchs may suffer, the company endeared itself to fans in Ukraine and nearby Europe last week by announcing that it would build a factory in Ukraine. Tesla is offering free supercharging to refugees fleeing the Ukraine conflict. Furthermore, Tesla will provide this service free of charge to anyone who owns a Tesla or another electric vehicle. At the same time, Elon Musk's equally well-known SpaceX company responded quickly to a request from Ukraine for the delivery of Starlink terminals to help the country's terrestrial infrastructure bolster internet access. We believe Musk will be repaid many times over in the form of goodwill gained for Tesla's brand and stock, regardless of how much it costs him to provide free electricity and Starlink terminals to Ukraine. As a result, our guess is that Ford has the most to lose from the Ukrainian crisis, and that in the long run, Tesla will recoup its losses and even come out ahead. The triple whammy of geopolitical conflict with Russia and Ukraine, persistent inflation, and rising interest rates are hitting investors hard. The drop has served as a reminder to individual investors that we cannot control market and economic forces. It's even more daunting for institutional investors who are dealing with hundreds of billions of dollars. Fortunately, Tesla stocks should be able to swing back around and deliver a bullish run in the coming years. What do you think about the Tesla stock crash? Do you agree with Ives? Comment down below.